Hi everyone, hope you're having a great day. Today is June 29th, 2024, and just going to have a really quick video for you today. So first of all, we're looking at roughly a year-to-date day chart or daily chart. We're roughly 6 months into the trading year, so we're right at the halfway point. And I thought I would just show this just to kind of see what the market has done so far year-to-date. And right now the QQQ, or the NASDAQ, is basically up 19%. The SPY is up 15%, and the Russell is up 1%. And this is so far year-to-date day. If you're interested in this type of chart or how to create this chart, I've actually got a video on this. I'll try to link it in the description or maybe show it somehow up here. If we want to look at this basically just in the last week, the last 5 days, we can see Monday. Basically, it looks like the Q's kind of dropped on Monday where the IWM went up. Kind of a similar story here on Tuesday. Wednesday, they all traded flat. And then Thursday into Friday, the IWM kind of took off. And we had some separation between the three. So next week is a holiday week. We have an Independence Day on Thursday, July 4th. So the market should be closed that day. But every other day, we do have a lot of news announcements. So on Monday, we have PMI. Tuesday, the Fed Chair Powell speaks Tuesday morning, so you need to watch out for that. Wednesday, we have the FOMC meeting minutes will be released, as well as unemployment in the morning. And then it looks like on Friday, we have another FOMC member speaking that day. And then we have unemployment and a couple other things there. So need to watch out for that. And this is just showing just kind of the open interest for next week, for next Friday's expiration. And just kind of the usual areas are pretty high pockets of open interest. So we're looking at roughly the 550 strike for next Friday with roughly 15,000 open interest right now. And then the 540, 530, and then 520 on the put side. And if we want to see a couple of cash secure put trades here, so once again, this is basically just a list of some ETFs that I have listed out here. And these are all strikes 5% out of the money. The 8/16 expiration, so that's going to be 48 days to expiration. And now we'll move over to the what I like to call the weeklies. And this is really just the S&P 500, all the stocks in the S&P 500 that offer a weekly options expiration. Normally when you trade the weeklies, they're more liquid, so they're easier to get in and out of. Only about half of the S&P 500 offer weekly expirations. But I'll scroll down here, and what you can do is just pause the video if you see something. If this is you're new to seeing this, basically on the far left here, we have the symbol listed. I have the last, the 52-week high and low, and then the last price right here, the percent change from Friday. We have a yield listed right here, so if they pay a dividend, it'll be listed right here. We have our expiration date, the strike you're looking at for that cash secured put, and then the bid and the ask, and then the actual return on capital for that trade. We have the return on capital annualized, and this just tells us what percentage out of the money we're looking at. So it's going to be at least 5% out of the money. And then we have the percent move, basically to get to the 52-week high or the 52-week low. This is the days to expiration for that trade. We have the delta for that put as well. And then earnings, and this is going to be the earnings in trading days, how many days away from earnings. And then we have RSI and the IB percentile. And this is, pretty sure this is 5% out of the money, and 8/16 expiration date, 5% out of the money. So anyway, that's all I have for you today. Thanks for watching. Have a great day, and bye.